So today we are going to begin with Unit 1 of Merchant Banking and Financial Services. So in this session, we will understand the basic of merchant banking, its scope, legal framework, and its role in the Indian financial system. Merchant banking plays a crucial role in mobilizing funds, advising corporate clients, and ensuring smooth capital market operations. Unlike traditional banking, merchant banking is not about accepting the deposits or giving loans. It is about providing financial advisory, issue management, and corporate restructuring services. By the end of this class, you will understand how merchant banking evolved in India, its regulatory framework, and the institutions that operate in this space. Merchant bankers are like in financial architect and project manager of the corporate world. So they help companies and governments raise capital, whether it's through an IPO, like initial public offering, issuing bonds, or finding investors. So they also give strategic financial advices. For example, if two companies want to merge, a merchant banker design the deal, negotiate the terms, and ensure all the legal requirements are met. Unlike your regular bank, merchant banks did not deal much with savings accounts or small loans for individuals. Instead, they work behind the scenes on big financial transactions, connecting those who need money with those who have it. Then merchant banking, that is banking services here mean helping business raise finance. For example, if a company wants to start a new factory, a merchant banker helps them raise fund by issuing shares or arranging loans. So they do not give the loan directly like a commercial bank, but like they help the business collect the money. For example, so Reliance hired the merchant banker to raise the thousands of crores through an IPO, initial public offering. The merchant banker ensure the issue is properly planned and investors put in their money. Next, consultancy services. The consultancy services are about giving expert advice. They may include financial advice, for example, how to structure the capital, marketing advice, for example, how to promote a new issue, managerial advice, for example, how to plan merge, and legal advice. For example, compliance with the SEBI or Companies Act. So the merchant bankers act like doctors or lawyers for a company, guiding them in important decisions. Who is a merchant banker? A merchant banker is a financial intermediary who helps companies raise money, manage public issues like IPOs, and provide advice on finance, management, marketing, and legal matters. So they act as a bridge between companies and investors. So this is a definition. Rule 2E of SEBI rules 1992 defined merchant banking as any person who is engaged in the business of issue management either by making arrangements regarding selling, buying or subscribing to securities as manager consultant, advisor or rendering corporate advisory services in relation to such issue. So these are the popular merchant banks of India. In USA, the historical term merchant bank refers to an investment bank. So their activities are regulated by SEBI. So these are all the popular merchant banks of India like JB Morgan, JM Financial and Goldman City. On this slide, we have advisory services. Merchant bank act as a advisory services. They guide companies on how to raise capital, how to go for merger, acquisition, or restructuring. For example, when Facebook invested in geo platforms, merchant banker advised on valuation and deal structure. So just like doctors give a treatment advice, merchant banker give the financial advice to the companies. Then second one is issue management. So this shows merchant bankers handle IPO, FPO, and private placement. For example, Zomato IPO in 2021 was managed by Kotak Mahindra Capital, ICICI Securities, and Morgan Stanley. So without merchant bankers, companies cannot reach investors smoothly. Think of them as wedding planners. They organize the entire event but did not get married themselves. So let's move on the next, loan syndications. So here we have a loan syndication. Sometimes a project requires such a large loan that no single bank can provide it. But merchant banker arrange a group of banks to lend together. For example, for building metro projects or airports, loan are syndicated by the merchant bankers. So it's like a group of friends pooling money together to buy an expensive gift. Let's move to another important services is portfolio management. The merchant banker manage the funds for clients and give investment advice. For instance, a high net worth investor can ask a merchant banker to invest in stocks, bond, or mutual funds on their behalf. So it's just like a cricket coach managing the team's batting lineup, choosing the right player for the success. So now that we have seen how they manage investments, so let's go to the next one is corporate restructuring. So on this, we see the corporate restructuring. The companies sometimes reorganize to become more efficient or competitive. So merchant bankers guide them in mergers, acquisition, or demergers. For example, Tata Steel restructured its European operations with the help of merchant bankers. So think of it like rearranging your study timetable before exams, so it helps you perform better. So next, we move forward and look another service, that is project counseling. So this is about project counseling. Merchant bankers assist the companies in planning new projects, checking feasibility, and arranging funding. For example, so before Adani Group expand a port, merchant banker check whether the project will be financially visible. It's just like a career counseling for students, helps them to choose the right path before investing time and money. Okay, then next we go for underwriting. Here we have underwriting. Merchant bankers guarantee that if an IPO is not fully subscribed, they will buy the remaining share. For example, if investor buy only 70% of the share issue, the merchant bankers purchase the remaining 30. It's like a guarantor who promised to pay your loan if you fail. So this is a risk management. It explains merchant bankers help the companies identify and minimize the financial risk. Give an example. They advise exporters on hedging against the foreign exchange fluctuations. It's similar to taking insurance. You can't stop risk, but you can protect yourself from losses. So we have covered all the major functions, that is advisory, issue management, loan syndication, portfolio management, corporate restructuring, project counseling, underwriting, and risk management. So together these make a merchant bankers the true financial engineer of the business world. Next, potential scope of merchant banking. So on this slide, we see the potential scope of merchant banking, client relationship. It highlights three important areas where merchant bankers support their clients. One is financing and M&A, that is merger and acquisition transaction, and licensing. Let's go through them one by one. First, look at the financing section. The merchant bankers help companies raise funds through private placements. That is private investment in public equity. So large stage venture financing and also provide a financial arrangement for merger and acquisition. For example, if a startup is ready to expand globally but needs large fund, so merchant banker can connect them with the institutional investors. Next, we have merger and acquisition transaction, which means merger and acquisition here, merchant bankers advise clients in buy side and sell side transactions. And even reverse merger. For instance, if a company A wants to acquire the company B, the merchant banker will act as a financial advisor and negotiator to make the deal smooth. And finally, we see licensing and partnering. So this is especially useful in sectors like pharmaceuticals and biotechnology. So the merchant bankers helps companies with out licensing, co-development, co-promotion of product, and also support in taking the research from the preclinical stage to marketed product. So they help business collaborate and commercialize innovations. So how merchant bankers go beyond just fundraising, they build a long-term client relationship by supporting financing, transaction, and partnerships. So it involves providing specialized financial services and advisory to corporate, institutional, investors, and high net worth individuals, helping them raise funds, manage portfolios, and execute complex financial transactions. Next, the key functions of merchant banking: fundraising and capital acquisition, underwriting and issue management, portfolio and investment management, project and corporate advisory. So these are the functions of merchant banking. Merchant bankers assist the business in raising funds through the public offering of shares, debenture, right issue, preferential allotment, private placement, and syndicated loans. Then second one, underwriting and issue management. They provide the underwriting services for IPO, FPO, and right issues, helping firms to manage the public offering and ensuring successful capital raising. Then third one is project and portfolio and investment management. So merchant banker manage the investment portfolio, offer tax planning, and advice on security selections for high net worth and institutional clients. Then what are the services rendered by the merchant bank? Loan syndication, leasing services, financial restructuring, and stock brokerage. So these are the services rendered by the merchant banks. Then what are the role of merchant bankers? So financial intermediation, corporate counseling, project management. So these are the main role of merchant bankers. What is financial intermediation? So bridging the gap between the investor and entrepreneurs, advising on capital structuring and financial strategy. Then corporate structuring, counseling, providing the expert guidance on merger and acquisition, regulatory compliance, and international business operations. Next, merchant banking in India. That is, merchant banking in India began in the late 1960s and has since become a cornerstone of the Indian financial system, providing specialized financial and advisory services to business and entrepreneurs. In 1969, first merchant banking services introduced by Greenlace Bank. In 1972, State Bank of India started its merchant banking division. Later, ICICI, IDBI, and commercial banks are entered in the sector. After SEBI Act 1992, merchant banking became regulated. So in the early 1970, the Citibank State Bank of India 1972 and ICICI 1973 launched their merchant banking divisions, followed by the other nationalized and private banks. So initially services were limited to issue management, but as the Indian financial market grew in the 1980s and 1990s, particularly after the economic liberalization of 1991, the merchant banking expanded into fundraising, loan syndication, merger and acquisition, and comprehensive corporate advisory. The Security and Exchange Board of India introduced merchant banking regulations in 1992, requiring registration, minimum capital, adherence to operational guidelines, and the separation of core investment banking from other activities. So the SEBI continues to oversee the industry to ensure transparency, investor protection, and stability in capital market. The merchant banking in India has grown from a niche service for select entrepreneurs to a vital financial sector supporting the growth of Indian industry, especially in the era of liberalization and globalizations. So next, merchant banking categories in India. This is categorized by four categories. One is category one, act as a issue manager, advisor, consultant, underwriter, portfolio management. We are giving some full services. Then second, category two. So advisory services, underwriting, loan syndication. Then category three, only underwriting and portfolio management. Then category four is advisor role only. Then these are the structure of banking in India. The scheduled bank divided into one is commercial and cooperative bank. The commercial bank is divided into four. One is public sector. 27 public sectors are there. Private sector, 30 foreign banks. Then regional rural banks. The public sector bank again divided into two. One is nationalized bank and State Bank of India and its associates. Then merchant bankers in India. As of now, there are 135 merchant bankers who are registered with the SEBI in India. It includes public sector, private sector, and foreign players. Some of them are, one is public sector merchant bankers. For example, SBI Capital Market Limited, Punjab National Bank, Bank of Maharashtra, IFCI Financial Service Limited, Karur Vysya Bank, and State Bank of Bikaner and Jaipur. Then private sector merchant bankers, ICICI Securities Limited, Axis Bank Limited, formerly UTI Bank Limited. Then Bajaj Capital Limited, Tata Capital Market Limited, ICICI Bank, Reliance Securities, Kotak Mahindra Capital Company, then Yes Bank Limited. Goldman Sachs Securities Private Limited, Morgan Stanley India Private Company Private Limited, Bank of America, Dutch Bank, Dutch Equities in India Private Limited, Citigroup Global Market India, DSP, Merrill Lynch Limited, FedEx Securities Limited. These are all the merchant banking. These are all the foreign players in merchant banking. So then NBFC offering the merchant banking. So what do you mean by NBFC? That is non-banking financial company. So a financial institution registered under the Companies Act 2013 engaged in lending, investment, leasing, hire purchase, etc., but not a bank. Some NBFCs are registered with the SEBI as merchant bankers, enabling them to provide issue management, underwriting, advisory, and portfolio management services. Then role of NBFC in merchant banking, it provides alternative financing options to corporates and it acts as an issue manager for IPO and FPO and offer loan syndication and project counseling. And the main role is to engage in underwriting of securities and it is very important role, vital role for support SME and mid-sized companies where traditional banks many may hesitate. So these are the examples of NBFC in India offering the merchant banking. So JM Financial Service Limited. So this is leading NBFC with the merchant banking, investment banking, and wealth management. Then Motilal Oswal Financial Service Limited. It offers issue management, advisory, and portfolio services. Edelweiss Financial Service Limited provide a merchant banking, IPO management, So debt syndications and L&T Financial Holding, it provide a structured finance and advisory services are given. So these are the types of banking system, the two-tier structure and scheduled and non-scheduled bank. The scheduled banks include commercial and cooperative banks. The commercial banks include public, private, foreign banks. It regulated by the RBI under the Banking Regulations Act 1949. So based on the structure, it is divided into unit banking system and branch banking system. The unit banking system is operate with a single office without branches. It is popular in smaller economics. For example, some local cooperative banks or under the unit banking system. Then branch banking system, it operates with the head office and many branches across the region. It provides wider reach and stability. For example, SEBI, SBI, State Bank of India, and HDFC Bank. So based on the ownership, public sector bank, private sector bank, foreign bank, regional rural bank. So the public sector bank, it is majority owned by the government of India. For example, SEBI, PNB, Punjab National Bank, and Bank of Baroda. The private sector of bank is considered as owned by the private shareholders. For example, ICICI, HDFC, and Axis Bank. So the foreign banks operate in India, but the headquarters in abroad. Example, Citi, HSBC, Standard Chartered. So these are the examples of foreign banks. Then regional rural bank, RRBs. So jointly owned by the central government, state government, and sponsored bank, focused on only a rural finance. Then the next, these are the components of Indian financial system: financial institutions, financial market, and financial instrument, financial services. Then a regulatory framework for merchant bankers. So we are having the major components of the regulatory framework for merchant bankers, specifically mentioning operational guidelines, pre-issue obligation, post-issue obligations, guidelines for unlisted company. The first, operational guidelines means rules and standards that govern the everyday functioning and compliance requirement for merchant bankers. So these are the operational guidelines: submission of offer document, dispatch of issue material, underwriting. So everyday functioning and compliance requirement for merchant banker. And the pre-issue obligation, that is the duties and process that must be fulfilled before the issuance of securities, such as due diligence, disclosure, and the regulatory approvals. Then post-issue obligations. So the post-issue obligations means responsibility to be met after the issuance of securities, including allocation, refund, and reporting to the regulatory authorities. That is post-issue monitoring report, redressal of investor grievances, coordinating with intermediaries, stock investment, underwriters, bankers to an issue, post-issue advertisements, basis of allotment, reservation for small individual investors, and having other responsibilities. Then guidelines for unlisted company. Special regulatory provisions and compliance measures that apply when merchant bankers handle the issues for companies not listed on the stock exchange. If each of these components ensure that the merchant bankers operate in a fair, transparent, and accountable manner, protecting both investor and the integrity of the capital market. So legal and regulatory framework, the governed by the SEBI Regulation 1992, the Companies Act 2013, provisions for public issue and corporate governance, the Securities Contract Act, SERA means 1956, the SEBI guidelines for disclosure, underwriting, and due diligence. So thank you once again. Thank you all.